Okay, I'd redefined my one of my macro buttons so it wasn't so close to the Control C because I kept getting copy and paste stuff, and I chose the wrong one. All right, let's start over. So yesterday into the close we took out. There were no bears. No bears. They got wiped out. So we needed more bears. That's how it works. We did that the other day right there. We got them out. Then we needed to get more bears in. So the market took some time, and then was able to take them out. And the same thing happened today. We wiped them out. You could see tension curled up into the close. If you were watching, we went through it. And then the bears came in. You could see they impacted the market as they came in to try and pick this up. But the problem was that they were getting pulled into a market that was controlled by the bulls. They were able to keep control of the market. And so, tough luck, bears. So here's what happened. So right here in the open, you could see decay right there. It popped up. There's our trapped orders. So you get the signal, then you get the volume, and then you look for the impact. And there were some sweeps down. It took a little bit till about here, and you can see tension moved down. Bears hit. So first one is a hit by the bears. Interesting. It moves down, and decay was positive, moved down, moved back positive. There's no trapped orders, and then moved down again. So we're getting a down signal. There's the trapped volume, and they hit here, and you can see tension was rising. So bulls hit. It moves back up, and we walk away from decay, and we see that there was also a sample right here on velocity, and velocity dipped under and popped back positive. We're able to track a bearish position right here, and it took a minute for the hit to come in right about there. I think this tail, and you can see tension was going. So again, success, and it's like, holy cow, we have two sides of the market. So that's what we were doing this morning. But if you kept in mind what the objective was, the objective today was to capture in bears and then get them to do the wrong thing. And unless the bulls came in and the bulls, who are the controlling party, you can see that here, unless the bulls stepped aside or gave the nod, sort of like, okay, you guys can bring it down, unless they approved it. The bears were not walking into a bearish situation. They were walking into potential. Possibly they could push things down. Maybe. That's the best they had. Well, we know this isn't the first position, so we had bullishness yesterday through here. This was like the secondary position. This is like the tertiary position. So again, you need to watch out for teeth. And this is something you have to look for. Teeth are when you see the setup, so you see your entry, and then you look to try and enter on its failure. Teeth are very common in secondary and tertiary positions. If you just anticipate it, it makes them fairly simple to deal with. But if you forget that markets are bigger than one day, you can forget that. And then when the market pushes down through the stops, that's the entry, and you got stopped out, and it takes off without you. You weren't expecting teeth to show up, and that's what got you. It wasn't about you not being able to do it. It was about you not expecting teeth to show up in a secondary or tertiary. That's all it is. So just expect it. So you just track down the best trades. So we had another sample right here. It moved down. We got right there. And the bulls, well, it was sort of questionable. There was no impact. But we had this right here. See, this is the low of the day. You see this red dot's the lowest red dot. It's also the earliest on the bottom. So that's the one. It retested it, and it gave us a pretty big wide short. So it's a wide sample, and then there's a short amount of time right here. And there's the trapped orders. This is a wide short. Maybe I should say wide quick, because then I'm not using the word short. A wide quick, but wide short just rolls off my tongue. A wide short, so it's a wide and then a short amount of time. There's the trapped orders. The new highs came popping in. Here was our decay retest. So below the decay retest, let me get rid of all this. Below the decay retest, you you say there are stops down there. Decay retests are not about holding risk. They're about getting your foot in the door and trying to catch something that pops. And so that's what this did, try to catch something that popped. But we knew about the teeth, right? So that's where we knew about the teeth. So looking here, this would be where the failure is, on those stops, because of open interest theft. It's where you create the setup and then you stop it out. And there was also liquidity here, which was sort of questionable. It wasn't impacting tension, but we were also setting up a decay retest and we were looking for teeth. So when it popped down, we saw the tension was moving down, but it never really accelerated. But you could see they did stop this out. It was a nice quick bar that let you know it snapped those stops. You know, when the market hits a decent amount of stops, it pop. It's like an instant point or 2 points. It just like glitches through everything, fills it instantly. And that was the spot to hop in. Now there were some other things that I saw at this moment that I think made this a good spot to look at. And I'll just quickly show you. The first was VoltiWap. It nailed yesterday's lows. This is a very common thing. I see it all the time. Hitting the previous day's closing VoltiWap is a normal, this type of thing. The other thing that I saw was that we had, for all the day, you could see this was the most well-defined low volume node right there, or LVN. There were some, maybe you could say there were some places where it was lower, but it wasn't as defined. The contrast here, if you took this pivot and this pivot and this pivot, you took this distance and this distance, and you got this ratio, you could see that it was a high percentage down. It was just very clearly defined. If you took this pivot, this pivot, this pivot, and you drew that line, this percentage right in here is not quite as good. So you could just see it was very clear. That area right there had demand because it didn't get a chance to sit around at all. And you could see it didn't. It came back right there to the low volume node. I liked that. I also was tracking this right here. There was a zero test. So I guess you could say I'm covering confluence, but I thought it'd be useful to, today just had a lot of things that happened right at the right moment. There was a zero test right there. So we had that decay retest. We had liquidity that got pressured. We were looking for the teeth, so I was getting what I wanted. We got the zero test. We got the low volume node. Oh, we just had a couple of things that were going on right there, and it met my narrative. And you remember what the narrative was? Find bears. Find them and get them to do the wrong thing. And so we found ourselves some bears, and after the bears were found, then we found ourselves a spot where that we could get some good open interest theft. Open interest theft is tough to trade because you have to understand what liquidity is in order to determine the open interest theft. Otherwise, you'll look at the liquidity and assume it just doesn't work because it failed, but you're interpreting it wrong. It failed because this market's stealing the liquidity from that position. This is a thing that happens all the time. So anyway, so we got that. I think this right here was the #1 trade for today. And a lot of you know I was trying to be pretty aggressive about saying this is their moment, this is the time, this is good stuff. It moved up. Now, what was the so at this point I'm pointing this out and sort of giving you an analysis cadence by coming to a sort of a, you can feel it, right? I'm like cadencing. Well, it's because at this moment, once we had that, as soon as it started moving up out of what I thought was a good spot for the bulls, things sort of changed. So everything before here was find. I don't know why I added an E, was find the bears, which essentially are sitting about here. And everything after here is trick. So the objective here, we do this every single day, so if you're not familiar with it, just keep tuning in, you will catch on. It's to trick, and we're gonna go through the hope cycle. And I just like the word hope because when you say hope is evil, people are like, and it sticks in your head a little more. It should, because I don't think it's necessarily strictly defined as the hope that you're typically associated with, but the idea, I think, sticks. The idea is you get them into a trade, the trade runs them negative, then you give them a shot, right? The drip, because that's what price looks like. It's just like pop. And then you nice and slow move it up, And then right here, you oftentimes get the liquidity. And yesterday I went over a little bit more, but essentially the idea is during this drip, you get a validation, and that gives you some hope. And in this instance, hope is where that you say, I was right. This is a big deal. Was right. Was right is different than I am right. Was right has this like solvedness to it. It was already done. Am right could still be broken. I think this one feels better to say. So I was right lets you say I'm not liable, which means you think, and this is where you're wrong, you think the risk is not yours. And I think that's what goes on here. You get that hope, and it's done with some validation that you don't deserve. That validation also doesn't give you money, because it'll just hit your break even most of the time, and you won't cover because you're a terrible human being. We all know that. We're all just terrible people. That's fine. We can still get along. And you could see that as this moved up, a lot of you saw that I covered after it pushed through the highs. And some of you were asking, why'd you do that? And I think I even got hassled by Diddy, and it was the best hassle he's done yet, because he used my own words against me. I covered here. And let me please defend myself. I didn't like it. I didn't like what was going on. So when we got up to the high here, so this is where the position's sitting, right? For me, pushing through a high aggressively, like I think this was, and the reason I call it aggressive is because, look at this, it just went straight up and through the high. To me, that's aggressive. It didn't give us any trouble. If you got in this trade with me, it was easy. There was no trouble. It just made its way up and went right through the high. It was like, yay. And I'm used to a little more kick in the face. And so we got up to the high, and let me mark this so you can kind of, I'll just borrow this one. I'll mark the high so you could just get an idea. We moved up to the high, and I'm used to kind of getting up nice and close and then just messing with you, right? You have this difficulty, and then it finally sort of moves up, and then we can move on. This looks to me like normal stuff. But when you just shove right through the high, it's like, whoa, you went right to the main event. What are you doing? I didn't like it, so I covered. And this bar spiked down right after, and it's tempting to say, oh, I knew something. I didn't know anything. Basically, I just wasn't getting what I wanted. I was expecting to see this spike down right here before we hit the high, because for me, that made more sense. For me. That's what I wanted to see. And like I said, I'm a snooty, snobby trader. I stick my nose in the air as quickly as I don't get I love getting just exactly what I want. Yesterday was great. It was another easy day. It just moved up. I got the trouble before the high. It grinded up. It swept. Look, it was just easy. I mean, I got everything. I love to get what I want. I like to say, here's what you will do for me, market. And if you don't do it, you're betraying me, and I walk away. So that's what I did. And Diddy Kong at this moment said, where's your trust? Well, and I tried to defend myself, and I probably shouldn't. I didn't like what it was doing. I felt like at this moment the market was betraying me. And I was also well aware that you get an impulse move, all the pain and suffering, and then an impulse move. And I like the impulse moves. I don't like holding through the crap. It's stressful, it shoots my cortisol up. You have this potential through those areas where that during this section here, you're open to making a mistake, misinterpreting, maybe something like that. I like to cut my time down, and I knew at this moment I had posted, I said, this is a good spot. We're going to start to see trouble, and we did get the trouble. If you just want to catch that straight leg impulse move, in, out, happy, no stress, you're going to live longer, your heart rate didn't go up, your blood pressure hardly flickered, you only white-knuckled for a few minutes waiting for it to sort of move, that's good. I mean, this is literally the pain that we paid for this move, and that's all we had to pay. This is the pain you had to pay for this move. And this pain, it looks more like this, because the longer you hold, the more the pain can get to you. The more you can start saying, oh, maybe I'm wrong. Oh, maybe. And it's not the worst thing in the world, but I hate it when I get into a position and then it moves well, and then I'm like, oh, you know what? It's not really, maybe not what I want. And then you end up holding on forever. And then it does do what you want, and it ends up being that the gains you get here are not worth the suffering. So consider, through here had an amount of pain. It essentially went positive immediately. So there was almost no suspense here, where that I'm sitting here going, oh, is it going to work? Is it not going to work? Okay, I just want to paint this out because this played a role in how I made this decision, and it's hard for me to get back to this stuff after the day is over. So I just want to explain it to you real quick how I came to this conclusion, so that you guys. Oh. Thank you, replay. I just read your note that the volume profile of my mic isn't set the same. Dang you, OBS. Actually, it's not OBS' fault, it's my fault. Okay, so my pain here, the suspense was really low. I mean, I got into it, it worked really well. Ran. It gave me basically sort of two legs. I would hardly call this two legs, because this is not really pain and suffering. It was just, it popped up, see, over the Volti-Wop, came back to the Volti-Wop, and just gave me the second leg. It was the easiest two legs I've ever. It's not. That's not true. I have caught easier ones. But it was easy. Okay. So in terms of suspense, there was almost none. In terms of chop, and I don't mean Washington. Is it chop? Is it shop? No, it's chop. In terms of chop, you know, this kind of stuff where you have it moves back against you, and you're sort of. And then it moves up. There was maybe 3 or 4 minutes, maybe, but I would hardly call that chop, because it hardly did anything upsetting. So we have low suspense, we have low chop. It moves straight up to the high, and I'm wanting to see a move through the high. That was really sort of mentally, I was like, okay, getting through the high to liquidate, and it pushes right through the high, so it meets my targets. So this is time to target. Almost immediately, there was like zero stress in this trade. I love no stress. I like to make money without doing anything. And so when I sat here and I saw what was going on, it betrayed me. I was irritated about that. But at the same time, I know how this works. I knew it was going to give me trouble. I could take a nice, quick, it was 16 points, or 18, 16, I don't know. Let's just go 15 points, because that's a nice round number. I could take a nice 15 points with almost no stress, or I could sit here for 2 hours enjoying cortisol, getting pumped into my bloodstream and waiting. That was a no-brainer for me. That plays a big role in my head. And I'll tell you why. Once I set up my trading station, I had an office for a while. And what was happening, and maybe this is too personal, you guys don't want to know, what was happening was I wasn't seeing my family. I didn't get to see my son. I did that. I had an office for like 2 or 3 months. And I hated it. I loved it during the day because you could shut the door and you could just really get involved. But I hated that I wasn't seeing my family. And when you can just shut yourself in an office, you can get lost in there, especially with markets, and you just don't look at a clock. You can code and all sorts of stuff. So what happened was I wanted out of the office. So I plopped myself, you can't tell, but I plopped myself in the middle of my living room so that I can be involved. It just mattered to me. And I learned this really, really interesting rule. You want to know my secret? This is awesome. If you're sitting here at your desk, this is you at your desk, there's the chair, and you're working or you're watching markets, look at you have awesome hair. and a child comes up to you. Now, something you got to know about children, they're extremely disrespectful. They have absolutely no respect for you. Well, something that happens, at least to me, I mean, you guys could tell me your sense is that as your risk goes up, your fuse for being disrespected, somebody, walking up and as like a 3-year-old or 4-year-old will do is blast their lungs into one of your ears, you realize that there is an intrinsic relationship, a really strong one, between when you're being emotionally taking risk and dealing with children. Holy cow. I was snapping all the time at my son, at my daughter, at anyone who walked by, my wife. My phone rang, and I was snappy. And I came to the conclusion that, and I still do this today, and you have watched me do it. If I can't tolerate my child, my youngest, 5, if he walks up to me and I'm snappy, I know I can't trade. There's just something to it. The length of your fuse to dealing with a disrespectful child is directly related to your ability to make stupid choices. So I never ask my children to leave me alone. And this is what we're doing in the chat room too, because they regulate me. And it took me a while to actually figure out how to get there. And you gotta let it go. Try it with your kids. Let your kids come in and bug the heck out of you while you try and trade. And you'll notice a correlation between your bad decisions and your fuse. So if I can't tolerate children, I don't place trades. And I've gotten better. I think I've gotten better. And that is one of the little regulators I use to check my emotions. I let my children walk around me and irritate me because that helps me big time. I'm not really sure how I got there, but that's a useful thing. That is a big thing for me. It made a difference. I don't know if I would say it was like the biggest difference, but it did make a difference in my ability to control my emotions. Because everybody asks me, how do you stop yourself from being emotional? And that is one of the hardest things to do, because when you're emotional, you can't tell you're emotional until after. So that's one of the things I do. I literally do that. I check myself with them, and the same with sharing and stuff like that. So that's a tip. Try it with your kids. I'd love to know how it works for you guys. Okay, so we moved up. I didn't like how this was working, and I was happy with the low pain. So I dumped it right here, and the pain has gone on. We can see all the pain and suffering, all the fun, and this is what I think was happening. This spike down here, and then a little bit move lower. It's like this is moving down, and it's telling these traders here that they were right. And this is the hope cycle. So it pushed down with a nice sweep. They were validated, and at this moment, then you can say, okay, now we can start looking at getting their stops to move up a little bit. Oh, see, here we go. So that's starting to turn up as we get up here. So this is starting to look like we're about to trigger that. Just look for that sweeping pop and cover your trade, unless you're looking for like a trend. But if you're just looking to take advantage of this, we have been waiting for the tension to curl up all day, all afternoon. So this whole section was a lot of pain that I decided it was betraying me enough that I was like, I'm just going to take the money. I mean, if you're going to pay me immediately a decent amount, I mean, I don't know, 15, 18 points is, I don't know, fine with me for an intraday trade. I thought it was easy going. So this was good for me. That's why I got out. I just want to make that clear. Like, I didn't think the trade was totally dead, but it was betraying me in terms of I thought it should do something else, and I'm snooty. If you don't do exactly what I want, market, I don't want to play. So that's what I do. And that's, I think, just a style thing. Like, we watched Joe take that great trade. He's, he'll engage with the market and continue to engage over different time frames than I like to trade. He'll tolerate different things than I like to tolerate. So it's just very specific to me and how I like to act. It works for me. So we get this, we're pushing up, and there's really not much else to say. I mean, I think right there we got our curl up. I think this is pretty much these guys going, crap, we dropped the ball, they're hopping out, and we could move higher, we could whatever, but I was able to get out at this price, 31.12, and I don't feel like I really missed out on a whole lot. Even with this kind of curling up, maybe we could see a little bit more of that into the close. This acceleration is not like amazing, and the spike up is not. I mean, maybe we're just spoiled because this was yesterday's. It was this nice huge bar with absolute curl, and maybe today's just a little slower. I mean, it just looks a little slower. So, in my opinion, this situation where that we're trying to liquidate these guys right here is now over. Now, if you believe that this is going to continue higher, you need a format or a model of analysis that is broader than what I just covered. What I just covered gives you this. We're setting up the narrative, we're piecing together everybody, and we're running to liquidate one side in an attempt to advance, basically control the market or tension. And once you get the party liquidated, you can only hold on to that if you have a broader analysis that's going to let you know that. So could it continue? Sure. But from this perspective, we just took these guys out. It means that these bulls right here, the crafty bulls, why are they crafty? Because this was, this took some, you had to have a little experience, I think, to really keep up. And I did see some traders doing that. I saw Heat Map hopped in. I'm not sure if he got back in, but he actually got a better price than I did. I thought I was just like so awesome. But he saw it. And maybe he had different reasons, but these were crafty people. You had to really see what was going on and be keeping up to pick that up. So these crafty bulls were able to push these bears back to a bad position. Then they were able to do all of this in order to convert bears. And when I say convert, I simply mean turning them from actively trading to shutting off their brains and moving their stop loss. I mean, the whole goal is just get your stop up. They converted the bears, they pushed it up. We got our curl up that we were looking for right there. It's not amazing, but it's there. It was at a higher price. We got the whole shebang. So tomorrow, or even the last half hour here, what's going to be happening is, can these bulls pump tension higher? So one thing that just sort of, because we have a half hour, let's do a hypothetical. What if the bulls decided to just take their monies and push? What would happen? What would happen? Well, one thing to remember, that the players that I'm talking about can move equity index markets. These people who consume liquidity craftily have the power, the leverage, and the sheer size that, if they wanted, could pump this up. So if the bulls came in and just decided to push this up further, could they? Yes, absolutely. What if the bulls decided to cover their trade and just get out? Price would do this. Not this, this. What if the bears decided to come in and just push with all their might? Price would do this. So it's really important that you remember, these are not handicapped people. They don't have like, oh, the bears got stopped out, so they're incapable. It's that it's not rational. It's just not. You don't want to take a whole bunch of money and put $10,000 here, $1 million here at the next tick, and more, just so you can get it to tick up a couple times. All this capital is, one, exposed. It could be seen and used. Two, it's tied up. You can't use it in other investments. And three, there's no guarantee that you're pushing up will do anything more than bring it back on you. There's just none. So can it happen? Yes. And they could push with just sheer grit. We've seen that before, where they forget to call like the news station and it just goes, and you're like, that's a news bar. And then you go look and they're like, oh, we forgot. And then like later that day you hear a news outlet come and say, earlier today, our news station knew about this thing and that's what caused the move. And I'm like, yeah, sure, that's what it was. So it doesn't really matter. And what caused it is that we look at the intent behind it. Whether it was anything, it doesn't matter. We're gonna metabolize it by what it means, what it does, and how it impacts things. So sure, the bulls could come push this up. But I want to tell you the best investment that you can ever take is one where you put the money in and then you walk away, and when you come back, the system did all the work and there's more money there. So you kind of want to buy here and then do as little as possible and then eventually do nothing. You want to get to the point where the market carries it for you. How do you get a market to carry it for you? Now, in this situation, we got our liquidation. So could this continue? Yeah, sure. By what mechanism can we drive the prices in an index higher without a clear opponent? There is a clear answer to this. Now, all of you will call this, that could work, yeah, butterfly and condors. A lot of you will call it a squeeze. Some of you will call it a bleed. Some of you will call it a ramp. There's a bunch of names. Essentially what's going to happen here, and I call it an inversion. Why I call it that is because I want to invert the effect of signals for one side. So the reason I call it an inversion is there's a good reason for it. It's because I've been caught on the wrong side. And what happens is as it's grinding higher, you see a reason to sell. And then it pops down and you sell and it immediately turns against you. And you're like, crap. And then you see a reason to sell. And a sell, and a sell, and a sell, and a sell, and a sell. And you realize, if you step back for a moment, you realize there were no buys. Just whatever you're looking at, there's no reason to buy, and there are 100 reasons to sell. And you say to yourself, you know, if I had just inverted my thinking and I had bought every time I saw a sell signal, I would have done great. And so I call it an inversion. This is why. It's not because, it's because the experience that I was constantly having with these things was that at the end of it, I wish I had just inverted my thinking. So I call it an inversion. That's where that comes from. And if you've accidentally been on the wrong side of an inversion, you know what I mean. It churns you to death. And that's also why they call it a bleed. And what they mean is they cut you a million times, million paper cuts. And that's what the bleed is. It's a bleeding to death from a million paper cuts, and we shorted it down to a bleed. That's where that comes from. Or the squeeze, which is the slow grinding tighter and tighter, and that's for people who just shorted and won't give up. So if you sell into a squeeze and you call it a squeeze because that's what it felt like, it means that you need to tolerate bad ideas less. It should not squeeze you out to your margin call. You should have realized it was bad and gotten out. So I think that there's a lot of different names for it and stuff, but at the end of the day, that's what it is. So we have the chart that I use to track an inversion, the one that I just absolutely love, and a lot of you know this, is the tick compared to the ES. All this is doing is tracking pivots that I liked, the more significant pivots, and then it's mapping them over onto the ES. So you can see that earlier today, the market tried to get up over that. And why do I think this is inversion? I will tell you. This represents the stock, well, it represents a short-term accumulation of stock ticks. So if you have one stock tick up and one stock tick down, you get zero movement on this. So you have to get kind of a bunch of stocks ticking up, and then the tick kind of starts moving up. And overall, yeah, it's essentially, at its core, it's already an accumulator, by the way. It already accumulates the tick values. So when this is at zero, it does not mean zero stocks are ticking at all. It means a bunch of stocks tick down and then a bunch of stocks tick back up, and we happen to be at 0. Very different. It accumulates the ticks. So what does this tell me? How do you get all the way up to 1,021? Why is it so many traders use this? They're like, oh, just fade anytime it gets really low. It's because to get to 1,021 doesn't mean you have that many stocks tick up. What it means is you had a bunch of them ticking up over a space of time. Through here, if this is, it was a bunch of stocks ticking up together and not many stocks ticking down. This to me looks like sentiment. When all the stocks move together, the other thing you have to consider is who the crap has this kind of money? Because this is not one stock. This was not you buying into Apple. This was not you buying in even, $1 million into Walmart. Great. You did not move enough stocks to cause the tick to go to 1021. You just didn't. So if it was an entity, it was a massive entity. To keep things ticking in one direction over time is really, really impossible. It's just hard. It's expensive. You shouldn't do it by yourself. You should do it with friends. So when you see this push up to 1,000, what that tells you is a bunch of stocks ticked up together. But what does it mean if the index continues to tick, but the stocks don't? What does it mean if the index continues to tick, but the stocks don't? It means the market is doing the work. You're not having to come in and inject a bunch of capital, which, if you're a huge institution, results in these kinds of things, or you see a flurry of trading because of some news event. It doesn't matter. The point is, if the market is able to find higher and higher prices with lower and lower sentiment, that's bullish. It's like saying, I put in $1 million into my business, and I got $1 million back. And then I put 2 million in, or let's say we redid 1 million and I got 1.5 million. And then I put in 500,000 and I got 2 million. And then I put in 300,000 and I got, do you see how, like, that's what you want? And that's what this looks like to me. The less that you need stocks to tick up together like this, the less you need those sentiment pops all the way up, and you can get the market's doing the work. The business is working. It's working. So the way that this could continue is we need to get up over this, and the market needs to say, hey, this can keep going, and we don't even need new stocks. The market's going to do the work for you. How does a market do that? Oh my gosh, it's like magic, right? No, you help it. When you sold here and you stopped out along with everybody else, it went whoop. When you sold here and stopped out along with everybody else, it went whoop and whoop and whoop, and it's just trapping you in. They do this on the indexes, they do it on the ETFs, they do it in the stocks. Everybody across the board is just trying to sell their little signals, and it's eating you up. And it's turning all sell signals into buy signals. And that's how it works. We don't need the stocks to rise. We have a bunch of people trying to sell. And that's it. So that's the mechanism the market could use to grind from here further. It's the fact that people are trying to sell this from any little thing. I'll bet you there's so many people who are like, most of them just use ugly stop theory, which I'm not going to cover here. But they'll say things like, my goodness, it's above the, I'm going to do a voice, it's above the old value area high. This is totally a high price. Let's sell it in my Bollinger Bands. And I have a trend line. Ooh, and there's an EMA that's awesome, and it's just barely testing it. Maybe it's coming right through here, and they're getting all these signals, and those signals are just grinding through them. And it may be that all of your signals will work after you stop out, and then you'll say, oh my goodness, my EMA worked so good, but I lost money. And then you, for some reason, continue to believe in the signals that lost you money and then told you they were right. And you're in this horrible addiction model of being right and sucking at making money. And it never lets you go, because it's really hard to walk away from something that tells you how smart you are and how right you are and how you deserve to be on top. Also, you're losing a lot of money. Those are hard things to walk away from. So that's sort of how the inversions work. That's what we would need to see. The way I track an inversion has a, I don't know if I call it super strict, but it works like this. You get the inversion, price comes up, comes back and tests it, and then it moves off of it. So your risk right here for an inversion during the retest is at its highest. So your risk is at its highest, because if it doesn't work like it just did on that bar, maybe try to test it and it push through, what you get is these sweeps. As the market basically says, oh, you're not able to do it. You couldn't make it happen. And it motivates these people to just execute orders and things like that. Anyway, so that's the mechanism it can use. So for me to use this, I'd need to see it come over, retest, and then as it starts to move up, I'd say, okay, I'm happy. If it came down and it was a nice move over, like this one here, this kind of thing, the context didn't fit it at all. But it needs to be nice and clear over the line. You shouldn't have to draw lines. You should just be able to look at it. Let me see. We had one yesterday that it worked, but sort of not. You see how it sort of got here? It really didn't get nice and clean till here. This was the perfect looking inversion. I love this. It came right back to the tick and it took off. We had bullish reasons here, so it pushed over. It supported the trade by popping up here, and it took off. This was beautiful. Everything else was really, I like it to the tick. I mean, to the tick is, yeah. So this it didn't get enough over the top there. So it's important that you understand this mechanism, because this mechanism will eat you for breakfast if you're not paying attention, and it explains how markets can move without the necessity of impacting tension, or maybe how could prices rise if the momentum numbers are sort of flat. You can use an inversion to drive prices without impacting all those calculus people. And by calculus people, I mean anyone who's using signal theory, momentum charts, anything that tracks the past to sort of project into the future. Any momentum, anything will get destroyed in an inversion, because it's not using those things. It's not using internals. It's just wrecking people. It's just like raw pain and suffering all the way. So now if you weren't familiar with that, I know I ramble about this one all the time, but that's that. Another thing to go over, because we have such good examples, is portfolio orders. And I know you guys occasionally ask me about this, so quickly let me say, if I may, portfolio orders have basically two rules. There's a little more to that, but abstractly they have two rules. They're essentially the volume that it's tracking is qualified, or well, classified. It's classified as portfolio orders, so PF, if the market, and this is not the index, the entire exchange. If we look over everything and we try and figure out what does the market look like it's going to do, if this looks like it's going to close maybe down here, and you're an institution, and we've talked about this, professionals don't pay attention to the moment. They do, but it's the moment with respect to the end. If you're a professional sports player, you get up in somebody's business and maybe you heckle them a little bit so that they get sort of frustrated. And you want them to get frustrated because you guys, certain things are happening, and you're trying to push the way that the end of the game is, not necessarily say, well, I want to be winning right now. That's just not a sensible sports person. So if you're sort of saying, I see this is going to close lower, but I don't want it to close lower. I want it, I'm a buyer or something like that. They're responding to the way that it looks like it's going to close. That's the first classifier. That volume needs to look like that to me. The second classifier is that it's broad market. So it can't just be volume on the ES, the SPY. It's got to be in all the stocks across the board, all over the place. It needs to be big, and it needs to respond to the close. And in my assumption, that means that we're dealing with an institution who can see the future, or at least they care about it, and they're taking very large positions. Portfolio orders will fill all the way down. Negative 1,000 points, no problem. We'll buy all the way down and enjoy the ride back up. It doesn't matter. So I don't think of this as buying or selling. I think of it as filling. They will just consume. And so you could see on the way down here, they filled all the way down. No problem. So they were picking up this, they got up, came back down, they started to fill, and they filled, and it looked like it was gonna take off, and then they filled, and they filled all the way down. They picked up a final itty bitty little order right there, and they were done. And then this morning opened, and then they picked up some orders. And today, they picked up some orders. So I use this to sort of say it's a secondary thing. So I don't look at this first. I look at the, yes? What's wrong? Are you hungry? He's hungry. Okay, 1 second. I don't look at it as it's a secondary. First I figure out what's going on, and then I go, well, what are the portfolio orders doing? And then you wait for them to, I mean, you can tell they kept stopping. They're really close to not participating, and then it pushed up and they were finally done. Same here, they were filling, and then they finally were done. And if you can get the context right and you see that, this can be really helpful in giving you another body of traders that participate in the market to help you look at the events going on right now. When we saw this dip down into the buy today.
Give me something to eat first.
Okay, I will. You could see the portfolio orders popped in right at the right time. And so I was like, oh, great. They're playing when I want to play. That's good. Okay, I'm going to grab him some food, and I'll be right back. Okay, so there's a couple of philosophies here. Hopefully they're helpful. I'm trying to share everything so you guys can understand where I'm coming from. And the objective here is I tell you how I think, right? And we sort of figure out how to build that backbone together. And then you come in and you tell me how you think. And one of the best things here is when two traders who have lots of ideas or strategies and stuff like that understand each other. That is one of the most difficult things to accomplish. A lot of times you'll meet somebody and you know they're great, you know they got something good, or you know that you want to learn, but you just don't understand them. And then when you try to tell them something, they don't understand you, and you run into this issue, and it's sort of a language barrier.
Daddy.
You know, I have all these terms, velocity, sample. Yeah? Oh, okay, can you go play on your tablet for a minute? I'm almost done.
And I need some more food.
So that's the goal, to get us on the same page so we can understand each other.
Daddy, why won't you give me some cereal first?
You didn't like any of the cereal we had.
But I want something else to eat.
Okay, give me just a minute, okay?
But why won't you give me something to eat first?
He's really hungry. Okay, so market closed. We had our bears get liquidated right here, and market just didn't really do much. We're sort of moving back down. Our bulls will, if there's any lingering, they're going to be hanging out right here. This will be where they're at. But you could mark out the liquidity samples, which is here and here. Those are the fish, the ones that you can sort of look at and see, but really they were here in this teethy moment.
So
Okay, just a second. He really wants to. Okay, so if you guys have questions, send me a message. I hope today was useful. If it was, let me know. I felt like today went pretty good. I felt pretty enthusiastic about today. I thought a lot of people did some awesome stuff. So if you have questions, yeah, shoot me up. I'd love to hear. If you have different thoughts about this, let me know. Tomorrow, it's the same question we had today. Same thing. We knocked out the bears. Can the bulls find more bears and do this again, or are the bears gonna pressure this down? That's where we're at. All right, guys, I'm gonna go spend time with my son. If you guys send me questions tonight, I'll get on and check, and I'd love to hear what you guys think about the market. I'd love to hear your thoughts. And and heat wave. I just care. I only criticize or put a little pressure on people that I think are worth my time. I do not put pressure on people I think that are not worth my time, because I don't. So please know I mean my small comments in the best way. I see talent, so I want to develop it, and so I put a little pressure. Hopefully not too much. I didn't mean anything mean, or, well, I kind of did want to hurt you a little bit because I wanted you to grow. That was my objective. I wanted to hurt you just a little bit, see if I could get you to maybe grow from it. And by all means, criticize me. That's why I like communities. So, MD, you said theories apply basically to NQ. Yeah, basically they do. Yeah. So I mean it in with good intentions. I want to take the time and the energy to try and develop the people around me that I think are worth it. And you got to hurt people to make them grow, and you got to be willing to accept a little bit of pain from the people you trust to grow. So I hope everybody understands that. All right, guys, I'll see you tomorrow.